Mona Pignon here with Chris Zichichi from Franklin Loan Center.
Yes.
Thank you so much for being with me here today. And Chris, how long have you been in the industry? Just tell me a little bit about yourself.
Sure. I got into the industry in 2001, was actually dropped out of the graduate program from Cal State Fullerton. I have a degree in history, believe it or not. Not sure how that transpired into finance and mortgages, but so almost 25 years now, I've been either in finance or lending.
What sets you apart in how you serve first-time home buyers?
So what sets me apart, in regards to first-time home buyers, I would say my accessibility and communication. First off, first-time home buyers are, it's the most rewarding client to service. Okay. They usually have tons of gratitude. They're excited. They're obviously nervous and things of that nature. So when I hear first-time buyer, you have never owned a home before, I get excited, right? It's going to be a more exciting transaction for myself as you're kind of, these are clients that you're going to share with an emotional experience. So making myself accessible so they can make a decision, based on logic and not emotion sometimes. Communication, I'm big on communicating. Sometimes for a first-time home buyer, they might not get concepts that we take for granted. And so if I need to explain 4 or 5 times the same concept in different ways, I do have a little bit of a teaching background. When I was going to Cal State Fullerton, I substitute taught for a year. So just, finding new ways to make the information easy for them to grasp.
Yeah. So with the Community Advantage program, is it a good demographics of people that use that program? And can you explain what the Community Advantage program is?
Sure. So Community Advantage program is a Franklin Loan Center product where it goes by the geographic listing or the geographic area of the listing. Bakersfield has a large map that does qualify, which makes it super convenient, in Bakersfield, obviously, but the program's throughout the United States. It's going to be for buyers that at least have a 640 credit score. They are going to take advantage of no PMI with only 3% down, which is huge, right? In today's market, interest rates are higher, right? The prices haven't gone down. The prices are still holding. So if you can get into a property with 3% down, not have to pay any PMI. Also, the program, Community Advantage program, comes with a discounted interest rate. What that means is, on average, whatever the conventional interest rate is for that day, the Community Advantage is about 0.5% lower. No PMI, 0.5% lower on that interest rate. And then the last benefit with this program is, depending on their income, there could also be a 2% grant associated with it. There's no income limits for the no PMI and the reduced rate, but for the grant there is.
Awesome. And when you're helping people that are using that grant program, or any borrower in general, can you name some misconceptions about lending?
Misconceptions about lending. I think the biggest thing is, I need a perfect credit score. I need 20% down. I need to be 2 years at my same current employer. No, and no. We've helped people with low as 500, as low as a 500 credit score purchase. There's programs that cover the down payment, so you don't need a down payment, so you don't really need to save. And if you have 2 years work experience, or you went to school, we can even use on FHA loans high school diplomas showing you went to school to satisfy. We just closed one recently where the person graduated high school and then was a stay-at-home mom for a while and didn't work, and she's been at Chick-fil-A for the last year, and we were able to use her income. So you're a borrower, you have expectations, you have things in your brain. Just find out if you can qualify or not. Don't believe everything that you read or see, so to speak.
A lot of what prevented me from moving forward with purchasing a home was the rejection part. So how do you deal with the rejection of somebody that's come to you and they're not quite ready to purchase? What are steps that you help them take?
I always tell people, you're either going to qualify today or you're not. But if you don't qualify today, there's going to be a plan set in place where you can qualify. And this isn't loans are super simple. We use the acronym CIA.
Okay.
Credit, income, assets. Okay. Credit. Well, if your credit's not good enough, we can give you advice on how to get it better. So that's an easy fix. Income, how many hours a week do you work? How much money do you make? Obviously, you need to qualify for the loan that we're setting in place for you. So if you don't have enough income, okay. Is there somebody else that maybe a family member or somebody that you want to buy this house with, or can we maybe add income that way? Or that I need to work more hours or maybe more overtime to qualify for the house that I want. Okay. The last is assets. Assets are the easiest one to overcome because you have the state of California CalHFA program, CalHFA. They will lend you as a buyer, first-time buyer, the down payment. You pay them back when you either sell or refinance the property. So you can get a gift from a family member to cover your down payment, things of that nature. So assets of the three is usually the easiest to overcome because there's so many programs out there that are helping people buy houses today, rather than I'm gonna wait and save my down payment. Good luck. We live in California, we know it's expensive. I tell people, you're never gonna outpace the market, right? Because we hear that a lot. I'm gonna save for a bigger down payment. Every $10,000 more you put down on a mortgage, it's gonna save you about $65 a month. So how long will it take you to save up that $10,000? Because property values continue to go up. Right. So you're putting yourself at a disadvantage when you're saying, I want to save more money to buy a house.
Right. Yeah, it's definitely, going back to the misconceptions of, how much money you need down, zero down with the USDA, even the USDA loan. That's how I purchased my very first home, was with USDA. And I think that, having the background that I have as far as never believing that I could own a home to now owning two homes really puts me at an advantage when working with the first-time home buyers, because I do remember the rejection, but I also remember when they were like, you're approved for X amount of dollars, and you're like, what do I do? What do I do now? So and the CalHFA is something completely new to me, coming from Southern Oregon. So, having that option for people in our community and throughout the state, I think is a really great thing. But sometimes, even though people are signing on the dotted line about you have to pay this back, there's been situations that I've heard of that people think, I don't remember this. And so how do we, we're talking about CalHFA, how do we make sure that the borrower fully understands that money does need to be paid back?
Yeah, absolutely. So one of the things,
as an industry, how do we help that?
So I know for the loan industry part, when you are obtaining a CalHFA, legally, you're going to receive two sets of loan disclosures. You're going to have your first mortgage, which is the mortgage that you pay every month. And then you're going to have, CalHFA technically is a second mortgage, even though you do not need to make payments on it. It's 1% interest, so there is interest associated with it. So I think just educating borrowers, I don't know, it's a good question, because it is a common thing for them to forget.
Yeah. Especially when you're going to pay it back.
Yeah.
Wait, what a minute.
I don't remember this loan, Chris. It's rare for me to get that, but I can see it happening. They are signing loan disclosures for their first mortgage and then for their CalHFA. And then, not to confuse things more, but CalHFA does have a closing cost program called the ZIP program, which is paired with their regular down payment. So they can even get a third lien, technically, that's separated. Great question. I don't have all the answers, but I would say that I have not encountered, and I've done, I would say close to probably 100 CalHFA loans, personally myself, over the years. And so I've never had a customer say, when they go to sell or refinance, they go, oh shoot, I forgot about it. Right. But they've never said, I don't remember what that is. And I usually tell people, ideally, and we can't control the market, it's been a little different this last 3-4 years, but when rates drop, we're going to pay this off, right? If rates drop, and I'm a firm believer, when rates drop, will be able to pay this off. So just so you know, yeah, your balance might go up on your first mortgage, but overall, we're gonna lower your monthly obligations and get rid of this. You do not want it. That's what I tell my customers.
Yeah.
Don't let it sit there for 30 years because interest, even though it's only 1%, which is an amazing deal. If you can borrow money with 1% interest, it's a no-brainer. So.
Right. Yeah, and on the real estate side too, just for our industry to be more informative to the consumer, for real estate agents to reiterate, this is something that you have to pay back. I think it's our responsibility to make sure that they fully are aware. There's so many things you sign and it can get, you're so excited and like you said, the time comes to where you're ready to refi or you're ready to sell and you're like, oh, dang it. But I do think it is our obligation to make sure that the consumer is understands,
Absolutely. I think one of the things that's lost, I can speak for lending. I don't know about real estate, but I'm assuming it's the same as following up with your clients, your past clients, and you're just checking in, once a year, if it's a phone call or text message. And, for us as lenders, hey, remember, if rates do come down, we're going to be able to refinance you, save you some money. So make sure you keep your credit in line, and then we'll pay off. Remember that Cal Hafa program that you took advantage of? Yeah, we still got to pay that off. We want to get rid of that and absorb it. So communicating, talking, these are people, these are lives, these are families. And so I think sometimes we take that for granted and just see them as transactions, but they're not, they're people. So, and guess what? The more you talk to your database and your clients that you've closed, the more successful you're going to be in lending and real estate because they have friends and family and coworkers that need to purchase too.
Absolutely. That's definitely principles that I practice. And, with follow-up after closing on the real estate side, it was like 80% said that they would use their real estate agent, or maybe in the 90s. 96% said that they would use their real estate agent. Don't quote me on these numbers.
Yeah.
But, and then 87% don't follow up. It's insane the amount of people that gets fall through the cracks, and we're their trusted advisor, and people don't utilize that follow-up to stay in contact with their clients because they're afraid. That's just my opinion.
Yeah,
they're afraid something's wrong with the house, something, and I don't want to follow up because it may be something's wrong with the house, instead of looking at it as these people purchase this home for me and it's my obligation to make sure that they are well taken care of.
Absolutely. Yeah. And I think from a lending standpoint, I think it's more just, laziness, I honestly, or just forgetting, you know what I mean?
Chasing after the next thing.
Yeah. Your brain is like, ooh, who can I call? What stranger can I call to see if they want to buy a house, instead of let me just follow up with my people that I've taken care of already. And then there's going to be rare instances where maybe that customer was upset about this or that, so maybe there is some hesitation there. But I'd say 90%, with our customer satisfaction surveys that we see, I think well over like 96% of our clients are super happy with us. So we should be following up more as an industry.
As an industry, absolutely. My hope moving here to Kern County is, to change how our industry is looked at. Coming from a small town and practicing real estate here, there's a huge difference in even communication between agents. I've never, in the 9 years that I've been in the industry, closed a deal just through text message, and it happened here. The agent hardly ever answered the phone, and so I think we're going back to communication. I think it's really a great idea in our industry to have relationships not only with the clients but also other real estate agents, lenders. On your side, there may be programs that you don't have that maybe another lender offers, and the point is to protect our consumer and provide excellent customer service. And so if you're not able to help them, sorry, I'm not able to help you, but I know this person has an amazing program. And sometimes people just really don't think about that, making sure the client is taken care of. So, yes, it does affect your bottom line, but this journey that we're on in this industry is not about us.
Yeah.
Once you get your feelings involved with a transaction or, particular situation, then you're no longer thinking about your client, you're thinking about yourself. I'm going to go back to just a basic question. What is the difference between a pre-approval or a pre-qualification?
What is the difference between a pre-approval and a pre-qualification? Great question. So a pre-qualification is going to be a lender, loan officer taking a loan application. Maybe it's a phone call, maybe it's in person, 10, 15 minutes, you're going to complete a loan application, right? They're going to look at it, they're going to give you their best opinion, and their best opinion is going to be, hey, you're pre-qualified, go shop for a house. Normally there's no verification of income documents, no verification of assets. It's just credit report and what the borrowers are saying, hey, this is how much money I make, right? Mm-hmm. A pre-approval is verifying their pay stubs, W-2s, their bank statements. So make sure, hey, the money you say you make is actually qualified income, right? So how much money do you make on a monthly basis? I make $5,000 a month. Well, is that $5,000 every month? Is that $5,000 last month? So we're going to a lot of times take averages and have to use income calculators to find the qualified income. So when something is pre-approved, that means that an underwriter has signed off on their income, their assets, and their credit, and that pre-qualification is not worth anything close to a pre-approval. And that's when you hear these horror stories. I was buying a house and last minute the lender could not approve me. Should never happen, right? There are cases where the lender, has pre-approved you as they should, and you ended up buying a car and didn't tell your lender about it. You spent some of your down payment money. You get laid off of work. So there are situations that are out of everyone's control. But I would say 90.
Buying a car is within your control.
Actually, the lender's control.
Oh, okay, yeah.
At least beyond the lender's control. There are things that happen, and I'd go as far as saying, did you as a lender, when you pre-approved them, did you tell them not to make any big purchases? Because I don't think most lenders do. I know I do.
Just so you know, I tell them.
Yeah.
That's a conversation that I'm having in my consultation and throughout the process, and also sitting down with them and talking about, I know your lender might have already talked to you about this, but you're going to need down payment. It's usually, this percentage, and you're going to need closing costs if that's a situation, right? So just so you know, on the real estate side, there are agents out there that are reiterating the things that you're saying. And when we're on the same page and like you said, that great communication between real estate agent and lender, and then with the consumer, that's when transactions, there's things outside of our control, like you said, but that's when the transaction goes really well. And that's when our clients say, wow, that was a really great experience. I heard all these horror stories about buying and you made it so easy. So those are the types of things that I want to duplicate over and over again. And working with you, Chris, and talking to you over these past, 6 months now, I get the same feeling from you and how you care about the consumer. I really appreciate your time today. Is there anything else that you want to tell the internet world about lending, about yourself, and how people can get prepared for purchasing a home?
Yeah, so I would say one of the things I want to leave you with is one of the objections that we get a lot is talking to buyers. They showed interest in purchasing a property and then they shut the idea down, right? And I think what throws me for a loop is I believe it's based on fear, right? And you don't even know if you would be approved yet. So I would say, number one, just get approved, go through the process. There's no requirement, once you're pre-approved or pre-qualified to buy a house, you don't actually have to buy a house. You're not signing a contract.
Right.
So us as a lender, all we're trying to do is educate people. Maybe you can afford a house, maybe you can't. If you can't, we can show you what you need to do over the next year or two to put yourself in a situation where you can own a home eventually. I think that's our biggest objection is we're just going to wait.
Yeah.
Obviously, there's a need because you actually asked somebody that that I want to buy this property. So I would say is let's use logic and not emotion. Let's not let fear take a hold. And all we're asking as lenders and in the finance world is let's see what you would qualify for. Let's see if you are qualified. And here are your monthly payments and your down payment. And if you think that's great, go ahead and buy. If you don't buy. But at least you know. And now you're making a decision on logic and you're not letting fear run. Because the longer you wait, prices continue to go up. You're going to be at a disadvantage.
Yeah. For people being afraid, a lot of times they don't have all the information that they need to move forward. So, providing that clarity, like you said, through whatever avenue, providing the clarity for them to be able to make a decision, because not moving forward is making a decision. And, a lot of people just kind of get stuck in the what ifs. And what I like to do, Chris, is bring people out of the what ifs and make the American dream of home ownership a reality. I really appreciate your time today. And one more thing, Chris, do you offer services in Spanish?
Yes, absolutely. I don't speak Spanish. I'm learning. I think I just know the bad words, but no. My wife is a Spanish speaker who is my business partner. We also have several other Spanish speakers with our branch. So absolutely, se habla español.
Awesome. Well, I appreciate your time today, and thank you for driving all the way to Bakersfield to teach us today. And I look forward to the future.
Thank you.
Chris was here today and was able to share with us how we can make the dream of home ownership a reality. If you're interested in purchasing a home, we'd love to help you here at the Milestone Group. We have amazing lenders here. We can move an idea of home ownership into reality.